Good morning and happy Monday. Welcome to Stock Market Today. It's Monday, July 22nd, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So I hope everybody had a great weekend. Let's get right back into it. U.S. equities closed lower in Friday's trading, with major indices posting losses for the week. REITs and utilities underperformed, along with comm services and healthcare. Industrials, materials, and energy did move higher on the day. Treasuries were weaker, with the curve flattening. The dollar gained on the major crosses. Gold finished down 10 basis points, and oil closed up 60 basis points after Iran seized a UK tanker. So again, your outperforming sectors, energy, industrials, materials, finished higher. Financials were lower, but did outperform on the day. Underperformers, REITs, utilities, comm services, healthcare, and discretionary. As we get to the desk this morning, though, a little bit of a more positive picture. S&P futures are up 30 basis points to start the week. Asian markets were mostly weaker overnight, with China underperforming. European markets are mostly higher. Treasuries are unchanged. Dollar is stronger on the major crosses. Gold is slightly weaker, and WTI crude is up nearly 2%. So as we take a look here now at the S&P 500, really what we've had throughout last week was a mixed bag of earnings reports, and that led to a stall in the rally. And what's interesting to me is a little bit of a shift. If you notice these dark bars, last week we were seeing closes near the low of the day, and actually the market closed near the low of the week. So a little bit of de-risking in portfolios throughout the week. Support does remain in the 2,900 to 2,950 zone. Resistance is near the 3,000 mark. So what are we looking for now? As we've been saying, on any kind of pullback, we're looking for the RSI to hold bullish ranges. So far, so good. So far, the RSI is held above this 40 to 50 mark. That would constitute the indicator remaining in a bullish range. If the market holds support and RSI holds in bullish ranges, that would increase the odds that support is going to hold and that the market will continue to move higher. Add to that, the Chaikin money flow is bullish. Now, it did diminish throughout last week a little bit with those series of closes near the low of the day, but it still remains in bullish ranges. So really, despite the pullback, despite the back and forth about rates, despite the mixed responses to earnings, the picture really does remain the same. As long as we're holding above that 2950 level, we stay the course, right? Continue to look for leading stocks in leading industry groups. If 2950 breaks, however, I touch on this in my note this week, or today actually, we have to start to think about 2,900 to the downside. But so far, market's holding 2,950. Futures are pointing to a higher open here today. Your market in a minute. Here's what I'm talking about in the note today to Chaikin Analytics clients. Stocks pull back from all-time highs, but the trend does remain higher. 10-year yield stabilizes near support at 2.05%. Gold breaks up and out of that recent consolidation, while oil moves lower despite geopolitical concerns. And as we said, futures do point to a higher open here today. Power bars now for the major indices did see a bit of deterioration as the week went on last week. Dow lost 18 basis points on Friday, 6-5 bulls to bears. S&P 500 down 56 bips, 138 bulls, 71 bears, now back under that 2-to-1 bull to bear ratio. NASDAQ still strong at greater than 3-to-1, 32 bullish or very bullish stocks, 9 bearish or very bearish stocks. We'll take a look at the Qs again here as it does hold above support. Small caps were an inline performer, 511 bulls, 328 bears. Bonds down tick, sending yields slightly higher. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. If we look beyond these majors and some of the others, we do have a little bit more of a mixed picture, but the major indexes are, in fact, bullish. Now, let's take a look at our stock of the day today. Stock of the day today is PNC Financial Services. This is one of the bank stocks. Closed at 138.83, down 4 basis points on Friday. PNC has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, strong price volume activity, and positive expert activity. The stock does have some weak earnings performance, but when we take the 20 factors, 5 in each of these 4 categories, and put them together, we come out with a very bullish rating. We have a strong trend. We have a strong industry group, certainly the type of stock we want to consider on the long side of the portfolio. Now, we've been talking about the banks. We've been waiting for the banks to get into gear to drive financials up. Bit of a mixed bag around earnings, as we've said, but PNC looks compelling here. They look pretty compelling here. We have a nice breakout through this 135 to 138 zone. Very bullish stock, market and model are in agreement. Dynamic duo in gear. Very bullish stock outperforming the market. Just now entering oversold conditions with persistently bullish money flow. Above the rising long-term trend line, stock did report earnings last week. They beat, but not much. Again, just muted reactions to some of even the beats that we're seeing here in the marketplace. So if we ran through the checklist, I didn't put it here because it kind of interfered with the chart, but if we ran through the checklist, all lights would be green except for the overbought, oversold indicator. That would turn green when the indicator begins to round higher within an oversold condition. But the weight of the evidence supports PNC continuing to move higher and continuing to outperform the market. For those of you who are looking for some exposure in the financials beyond the insurance stocks on which we've been very bullish, PNC sets up as a compelling entry point. Take a look at PNC as a potential long idea in your portfolio. Looking at our sector tracker now, looking at the movement of the major sectors over the last 5 days, we can see that only 2 are in the green over the last 5 days. It's your consumer staples and your materials. Now, staples having a little bit of a defensive leaning. They were led higher last week by the food stocks and the tobacco stocks. Philip Morris seeing a nice pop following their earnings. Materials has been a group that we've kind of been warming to, right? We've been saying it now for the past couple of weeks since I returned from my trip that materials were starting to look interesting, starting to stabilize on an absolute and relative basis, and then it made sense to start to do some work around that group. Utilities, tech, and healthcare round out the top 5, but all were lower over the past 5 days, but they were outperformers. Industrials, financials, and discretionary are middle of the road. Real estate, energy, and comms underperforming. And real estate, while it maintains a bullish ETF rating, starting to show some signs of relative weakness. Same with the utilities, and that's coming as the 10-year yield stabilizes a bit within its downtrend, kind of finding support at that 2.05% mark. Energy, we've just been persistently bearish on that group. Don't see any reason to get super excited there just yet. And the comms, really what weighed on the comms was the Netflix report last week. Remember, Netflix traded down 10% following their earnings announcement and then traded down a couple percentage points more on Friday with some follow through. That weighed on the communications group. But within technology, one of the groups where we have been bullish and where we remain bullish is software and services. Over the past 6 months, software and services has outperformed the S&P 500 by 7.31%. And the power bar ratio, which measures future potential, is very strong. 54 bullish or very bullish stocks, 16 bearish or very bearish stocks. It's currently ranked number 9 of 21 subsectors that we look at, and it's moved up 1 slot over the past week. So some of the indicative names there, Leidos, LDOS, has a very bullish rating. Sykes Enterprise, SYKE, has a very bullish ratings, and DXC Technologies, ticker symbol DXC, also has a very bullish Chaikin Power Gauge rating. So as you're looking for ideas, these stocks with very bullish ratings are good starting points, and then you kind of run through the process that we go through here on a daily basis. But just taking a look at the software sector, software industry group as a whole, you can see XSW is the ETF, very bullish Chaikin Power Gauge ETF rating and a strong trend. So for you ETF traders out there, this is certainly a group where you'd like to have some exposure. If you don't already have some exposure, though, let's start to run through the analysis. Very bullish, outperforming, persistently bullish money flow, above this rising long-term trend line after breaking out of a consolidation, and now so far holding at support above the consolidation mark. What I will say is the overbought, oversold indicator is overbought and rounding out of that position. So really what you're looking for now is you're looking for an oversold condition within the context of an uptrend. If you're looking to add broad-based exposure to the software group, to the portfolio, these ETFs are a good way to do it. But at the same time, right, the process applies. You want to make sure you're getting them at the right time. As always, we prefer oversold or close to oversold as opposed to overbought. But certainly the type of ETF you want to own, and if you're looking for individual stock ideas, you want to drill down on the holdings of XSW and look for the individual names that set up based on the process. Taking a look at what's trending now, Friday's S&P 500 gainers and losers. State Street, STT up on earnings. CFG, Citizens Financial up on earnings. KSU bucks the negative trend that we saw from CSX and trades higher following their earnings announcement. JBHT, same thing, heading higher following their report. And Boeing, we got some clarity on what the liability around the MAX could be. That sent the stock higher by 4.5%. On the loser side of the board, ADS down 4% on earnings. Gilead, they're licensing a product from Novartis. That sent that stock lower at 3.25%. Symantec, a lot of moving parts here in the takeover drama with Avago, lower by 3%. Netflix follows through to the downside after that subscriber miss the previous day, down 3%, following through on the big move lower on Thursday. And Synchrony Financial, SYF, down 2.88%. Some of the surprises from last week, there's State Street beating by 5 cents. There's Citizens beating. BlackRock missed. Synchrony beat by a penny. Stock traded lower. American Express beat by 2 cents. Not much going on there. And you can see it's a busy week for earnings this week. 147 stocks in the S&P 500 slated to report earnings this week. Some of the ones that we're really watching: Cadence, TSS, UTX, PayPal, throughout the week. Just some of the names that have caught our attention on the loser side or the bear side: HAL, HOG, 3M, and COG. Take a look at this. Be aware of what names are reporting. Just remember that Chaikin advises caution when holding bearish stocks ahead of earnings. Let's dive in now. It's Monday. We look at macro trends across asset classes in our note. Now, we've been highlighting the Qs here quite a bit. I just want to point out that the Qs remain a market leader as investors adjust their portfolios within a slowing growth environment. Our thesis has been that they will pay a premium for growth. That's largely playing out. The Qs are holding above support at the 190 level. Really, we have 185 to 190 for the Qs as important support. Should we hold above that level? Likely path of least resistance is higher. Notice the RSI for the Qs, similar to the S&P 500, so far holding within bullish ranges, right? Got this breakout as the fund moved higher. On the pullbacks, RSI never went below 50 recently. We're looking for the same dynamic to apply here on this most recent pullback. Should the Qs hold this 185 to 190 mark and the RSI remain in bullish ranges, odds are that it will continue to go higher and continue to outperform. At the bottom of the screen here, you can see it's broken out of a consolidation relative to the S&P 500. Slight pullback here, but so far holding the breakout. Odds favor continued outperformance if and only if the Qs are holding above that 185 to 190 support zone with the RSI holding within bullish ranges. So far, so good. Above a now rising 200-day moving average. 10-year yield stabilizing at support is how we're going to classify this one for now. We're taking a look at the TNX here, the CBOE 10-year U.S. Treasury yield, and we can see the clear downtrend in place. Below the 50-day moving average, which is actually accelerated to the downside, below the declining 200-day moving average, also accelerating to the downside. But we have met support at about the 2.05% area, and we've seen some choppiness. Yields tried to back up, but failed at the 50-day. If you were paying attention last week when we talked about this, we said that that was a likely scenario, and that has played out. What's interesting to me is that the RSI continues to hold in bearish ranges. So the exact opposite of what we're talking about for equities, holding in bullish ranges. The yield is holding in bearish ranges. To me, that increases the odds that we are going to break 2.05% and continue to head lower. However, it seems like a lot of this has been priced in at the equity level, as we are starting to see utilities and real estate show some waning relative strength. So just something to keep in mind. If you think yields are heading lower and you're just going to go out and blindly buy the bond proxies, you still have to take your analysis. You don't just go out and blindly buy and sell everything. You take your analysis, you run through the process, take a look at what's going on here. You'll notice that recent utilities are starting to see their relative strength wane against the broader market. Oil moves lower despite some of the geopolitical risk. Now, it is trading higher by 2% today, but it's back below the declining 50 and 200-day moving averages. Rallies could not get the RSI out of bearish ranges, and it's heading lower once again. Chaikin money flow for WTI crude back into bearish ranges. This likely to continue to weigh on the energy stocks, which continue to underperform the market. So that's going to wrap it up for a Monday. Head over to chaikinanalytics.com/today to sign up for that email so you'll be able to follow along with this show. Have a great day, everybody. We'll be back here tomorrow.